Hi, Jenny. Welcome to Venture with Grace today.
Hi, Grace. Thanks for having me.
Okay, so as mentioned, I feel like I already listened to like a bunch of your other podcasts, so I will start with like the 2.0 questions. So like
I love
you
a good stalker interviewer.
Okay, perfect. So you've already done so you've done your startup, you were like wearing suits to go to when you were working in New York, you were like wearing suits in the morning and then you were like doing your startups like at night and then like later on you are the managing director of Techstars. Like, I want to start with like the Techstars era. I feel like that's where you built your like investment track record as well as like managing portfolio companies as well as like managing a fund. So I want to kind of like start there on like, what were your like day-to-day like back then when you joined and when you left as like the managing director, what were like the journey like for you? And then what were something that you felt like you've learned throughout that era?
Got it. Okay. Well, I started as a founder. And so I think
Mhm.
that really plays into my story. As I was working on my third company, I had met the founders of Techstars, Brad
Mhm.
Fell, David Cohen, and actually some of the other folks I'd come across because I'd, been in New York and they had launched in New York and all these other places. So I was familiar with the brand. And I was like literally working on my next company, which I thought was going to be kind of in the health, digital health space, which was interesting. And they were like, well, why don't you put that on hold for a little bit
Mhm.
and think about this other side? And, I'd done a little bit of angel investing and a little bit of informal coaching of other founders, right? Just trying
Mhm.
to help them not make all the stupid mistakes that I made. So it was a very intriguing proposition to me. Again, this was like, back in 2013, 2012, 2013. And so, Techstars was a very different organization. It was a small kind of family run group. And so I thought, okay, this would be interesting. Maybe I'll spend a year or two. I'll learn the other side of the business, and that would make me a stronger founder. So I went in with a very different perspective than I think most people do. I went in
Mhm.
to learn, but not to have a career in investing. Seven
Mhm.
and a half years later, I
Mhm.
had a career in investing. So,
Mhm.
life sometimes has other plans for you.
Amazing. I wonder, I have a couple of thoughts on there. Like, so one is like, I feel like building a fund versus like investing for return versus like building a platform, meaning like having operators in your community as your backers or like helping the portfolio run. I feel like those are three different bracket of things. I wonder one is like how do you kind of like create a crash course for yourself, because I feel like a lot of people entered either Techstar or like somewhere else like early on. Like not everybody can come out as like a managing director or like making it at a fund, and I wonder what were some key component for you to being like pretty successful there, and how do you see these like three bracket of things while like running fund.
Okay. So to finish my story around Techstars, I actually figured out that I was quite good, not necessarily at investing. Like none of us know if we're good at investing at the beginning, right? Because it takes a decade to find out. But what I did feel like I had, a good sense of was surrounding founders with resources. And those were often things that I lacked as a founder, right? So there was community, it was obviously capital, but it was access to like great content and mentorship and all these things. So the real learning at Techstars was how do I invest at scale, meaning in batches at a quick pace? And then B, how do I use the community to help me not only find companies, but diligence them quickly so I can make more informed decisions and then support this large portfolio. So that was the big learning. When I went to start my own fund, I said, okay, how can I combine some of the elements that I thought really worked well at Techstars with some of the areas that I thought were white spaces out there. And so when I looked around New York in 2017 and 18, I saw, wow, there are all these operators and founders. They're writing small checks into companies, but there isn't really a community that's kind of helping them do that. And so our first premise was like, how do we galvanize this community to support founders? Because we think that those small early checks on a cap table can be really catalyzing to a founder. So the first thing we were looking at is like, how do we build this community? And it actually took us a few years. We got the fund off the ground quickly, but the truth was building communities take a long time. when we raised the fund, we always, had the mission that this was going to be something that was going to be financially viable. And so we were looking at returns first, but we thought that this kind of unique model, galvanizing the community, would be the catalyst for really helping us get those returns, right? So I think it was a little bit of a combo, although we're not a traditional fund. We do have a traditional structure. We've got kind of a regular ring-fenced amount of capital. We've got this large LP base. But I think what's different is like we really bring the LPs on the journey with us. And that kind of sets us apart. So does that answer your question?
Totally. I have so many questions on the LP
Great.
part. Okay. So I wonder, so while your journey on like surrounding, I like, by the way, I really love the concept of like, because of you were a founder, you know what a founder may need. And then you're like kind of putting together this like, I want to say back office, but like some sort of like supporting like
Yeah.
platform.
I think that's a great way of thinking about it, because probably every day we get 4 or 5 people that come in with offers for our founders and for us, right? And they're service providers and they're other founders and whatnot. And I think, one of the things we do really well is we curate that. And we're like, this is really not going to be so helpful. We don't want to bother people with this, but like, actually, I think we have critical mass around this issue. And so we'll set up, kind of weekly or monthly collaborative talks around different topics, or we'll loop in different founders around different opportunities. And so we like to think of ourselves as kind of like, command central, where a lot is coming into us, and we're kind of slicing and dicing it for our founders in a really efficient manner.
I have a couple questions there. Like one is like, how do you kind of measure from like a return perspective? Because eventually, like everywhere VC is a fund, and I assume like there's like expectations from LPs, from like everybody else. I guess like how do you measure the outcome coming out of the community approach? And a second question
Well, I
is,
think every founder, every investor measures, their success really the same, except potentially, I guess, impact investors who also have that layer. But, we all measure it by money back to our LPs, which is called DPI. And so we're, very lucky that in our first fund, we have, DPI, which many funds don't have. And so our LPs are, quite happy, I would say, with where things are going in our funds. But I think that's how all funds are measured, and we are as well.
How do you, I guess, like having the earlier like benchmark for yourself to be like, we're on the right track to make X amount of return, and like, I guess like how do you benchmark these things while going forward as like a founder of a fund yourself?
Yeah, well, our benchmarks are really to our peers and what we've agreed with our LPs. So we want to provide outsized returns, which for us, is top decile, top quartile returns. And the benchmarks are pretty clear for the most part. There's, really smart data-driven organizations that kind of amass the returns, and we want to be alongside that. And then as we're talking to our LPs, we're kind of explaining our model, explaining why we think that we can get to those types of metrics and how we're going to do that. And so that's really the job of the GP, is convincing the LP that you've got this unique strategy and that you've got a path to execute it.
I wonder, when you were first, like, I think working at Techstar, because Techstar nowadays is like becoming a brand. Well, it's already a brand. So like, it doesn't really need to, I guess, like, quote unquote, like, you don't have to brand yourself to like, the community within you kind of thing. So like, but for you to go out and then create a new brand for yourself, I wonder, what is the brand building journey like, and how do you build like a strong community to support the founders? And in terms of supporting the founders, I guess like what kind of function would you emphasize more on? Like, is that helping them generate customers, or is that like, helping the top 5% of the portfolio to grow into a certain stage? Like, how do you kind of like spend your time on creating the outsized return?
Yeah. So I think with brand building, The truth is, I will have a vulnerable moment right now. And, I think when I was thinking about leaving Techstars, that was a real kind of question mark for me, because everyone in New York, because I'd been, running the programs for 7.5 years, kind of associated Jenny at Techstars. Like, I don't even know if people knew my last name. So there was a moment of like, is it the Jenny brand or the Techstars brand, or how's this going to work? So I was like a little bit nervous that like I wasn't going to be, invited to conferences anymore, or all these types of things. Turned out wasn't really a problem, but I think, we all have those moments of doubt in our brand building. But I think, what's unique to me is that I have a real authentic voice, and I kind of, talk about things as I see them. And I think in our industry, there's a lot of posturing, and there's a lot of like, oh, I'm crushing it. And, I do have moments where I celebrate, the wins. But, if you follow me on Twitter, you also know that I talk about, a lot of the things that aren't so great, whether it's being a founder or a funder. And I ultimately think that sets you up for two things. One, a lot of feedback and trolls and mean people. So you have to have thick skin to be real, but also, just a lot of, appreciation and support. And so I'd say, now when I meet founders that I don't know, I would say 75% of the time, they're like, oh, hi, Jenny. Like, I don't know you, but I follow you on LinkedIn or Twitter or something. And so that's really my community. I don't really care about having a huge audience. I care about reaching my audience, who are founders and other investors and people in the ecosystem. So that's on the brand building side. I think in terms of how we support founders, we have 250 portfolio companies. I am not speaking to every founder for an hour every week. That's obviously not our model. We're not involved in boards and, close to the companies in that way. What we have built is something that we think is pretty unique. And so we call it a many-to-many model instead of traditional venture, which is one-to-many. And what that is we've got this large community. And so again, going back to that, we're kind of the central control of it. What we try to do is connect founders to other founders so that they can help each other, as opposed to Jenny having to help a large portfolio. So the way that manifests is, I'd say once or twice a week, a founder will ping me and they're like, oh my gosh, you guys were so helpful with, X, Y, and Z. And I'm like, I don't remember talking to this founder. And then, I reach out to my team and they don't remember talking to the founder. But what happened was the founder connected to another founder in our community and something happened, right? There was a moment of exchange of some type of insight or support. And so that's the real magic, I think, when you have a large portfolio like we do, and you're trying to essentially scale something, an industry that isn't really inherently scalable. So we've had to develop systems, use technology, obviously, to kind of create that platform.
Totally. Without giving too much, can you elaborate more on like how do you kind of like concretely build it day to day? Because I feel like from like my personal experience running my own like tiny community, I feel like one of the challenges would be like, coming up with things to gather people together. Like people have to share the same goals. They have to be motivated to talk to each other. And I guess like what does it look like for you to make it an active community throughout time? And when you were, I guess like in the past, like let's say 10 years or so, like how do you kind of evolved your personal brand around this area? I guess like what are the tactical things you would do to kind of build a name for yourself in New York?
I think I'm very community oriented. So, like last night on a Sunday, I went to an AI hackathon to help be a judge and talk to the builders there. And I think, when you put yourself out there, like you get a lot of return. So even though I might not be investing in any of those companies or, I don't have the opportunity to speak to everyone, you get good visibility into, the builders of the future. And so, it's a real kind of honor that I get to do all of these things. And so I try to put myself out there as much as possible. I can't attend everything because there's a lot going on in a place like New York. And I travel quite a bit and I'd like to attend events otherwise. But I think my biggest piece of advice for people, creating, maybe starting out or creating a brand for themselves is just get out and do as much as you can, right? And get visibility and really kind of give back to the community by helping out, right? So there was a lot of things I could have do on my Sunday. I had a lot of work to do. I had a lot of personal things to do, but it's like, you spend time, with other people with nothing really expected in return, right? I'm just there to support. And I think, the truth is you will get a lot back. So I try to do that. And then the other thing is I just try to have consistency around posting, right? So, I mean, I'm a pretty active LinkedIn poster, probably post 2 or 3 things a week on other channels as well. We have a podcast, that you can listen to. And so we just try to be kind of, not too much in everyone's face, but just consistent. Like, what you're getting. If you come to my feed, you kind of know the content. I'm not talking about politics. I'm not talking about the weather. Like, I'm really talking just about founders and the ecosystem and the tech landscape in general. So that's my lane, and I like to stay in it.
Okay, I love that. I wonder, so how do you convert people from like a community member into LPs?
Well, we're not really in the conversion game. So, we have 500 founder LPs, and we're pretty happy with that. So we're not necessarily looking to convert people into LPs, but we do love to have more people in our orbit, right? So if you're, obviously if you're starting a company, we're interested in talking to you, but if you're supporting companies in other ways, we're also interested in talking to you. And we want to surround our companies with the best resources. And so there's a lot of kind of adjacent businesses and people in the ecosystem, and we want to make sure that the best ones are connected to our founders.
I wonder since you guys invest globally, I feel like it is actually like, I really like that your name, like your fund's name is like just matching with the investing strategy. And since like it's a more broader profile of companies, as well as like there's no geolocation boundaries to a degree. And how do you quickly diligence these companies? Like, what do you feel like is the I wouldn't say the game you're playing, but like it's more of like, in general sense, like what do you think are your unfair advantage to a degree to like, pull off this strategy? Because I feel like most people I talk to, they like to have a very specific sector, geography,
Yeah.
like track size. I do know you have like a set of like basically like a set check size, but it's also like very broad and to a degree. So I wonder how like what do you identify as your unfair advantage, and how do you like kind of pull off this generalist strategy?
Yeah, so we think at the early stage, being generalist makes a lot of sense. We can cast a wide net. And the truth is, many of our best companies have pivoted. So to get too concerned about products rather than people at the pre-seed doesn't really seem like that makes a ton of sense. So that's, I'd say, like thing one on the generalist. And then, starting at COVID, I guess, like I think the world has really, kind of expanded in many ways. And oftentimes we'd have founders that it's like one founder's in Chicago, one founder's in Bali, one founder's in Egypt. Where's that company based? Well, they might be a US entity, but like, what does geography actually mean anymore? And so, our thesis is that innovation is everywhere. Capital has been constrained to places like the Bay Area historically. And now that's totally opened up. So we want to be where the best founders are, wherever they are. And if that means their team is split around the world, that's great. And if it means that, they're based in somewhere like Sao Paulo, Brazil, where we have half a dozen investments, like that's also great. In terms of how we get access, I think that's a good question because, a lot of folks go into geographies and maybe they don't see the best deals and the like. So our strategy is slightly different. We have founders who are LPs on the ground. Those folks are aligned with us because they've given us money and they're seeing stuff all the time. And so that, coupled with our portfolio companies that are on the ground, is how we get our deal flow in these different regions. And then once, I think there's like kind of this tipping point. Once you've invested in maybe, 10 companies in a region, you have a little bit of a presence. People kind of know who you are. And, that kind of core group of maybe starts with 3 or 4 or 5 founders that are LPs, then blossoms because all those founders and their co-founders. And so all of a sudden you've got, in any location, you've got 40 or 50 people that can really help you both source and diligence, and then ultimately support the portfolio. So that's the way that we think about it. We know that it's a little bit alternative. There have been many, many large LPs, not founder LPs, but institutions who've come up to me and said, Jenny, you've been investing for a decade. You're in New York, your co-founder's in LA. Like, why don't you just run a normal strategy, investing on the coast, 45 investments, reserves, cookie cutter SaaS fund, right? Like everyone else has. And that's great for many people. I think it's a really smart strategy. It's not our strategy. It's not where we love to play. And ultimately, running a microfund is like running a startup. You have to have passion, and we have passion for doing super early and with a little bit of a global focus.
I wonder, so what is building your own brand after Techstars to look like, and what were some, because I feel like from a observer from the internet, I feel like it sounds like you are you have been doing the similar strategy at Techstars. So when you're creating your own fund, and it's sort of kind of because of your personal brand became so strong, so people have conviction for you. I wonder when you are before, I guess number one is where do you want to go from there? Because I feel like I don't know how you think about fundraising or managing the multiple funds. I wonder what are different stages, I guess what are what is your long-term vision look like, and then how are you thinking about things that you need to build from today to eventually resulting in, I don't know, font 10, and what's your thinking for more kind of the long-term play versus what you're doing now?
Yeah, so we're also unique in that we don't really have ambitions to raise $1 billion. It's, again, won't let us run our strategy. So we're pretty happy with small funds. We think it's a feature, not a bug. And we'd like to continue doing the work we love, which is writing small checks at the early stage. So I don't really see much of a difference now and in 10 years, which I think is unique. I don't think that means we're any less ambitious. We want to constantly be improving our systems, reaching more founders, potentially bringing on more teammates as not junior people on our team, but really as peers to my co-founder and I. So I think that's one way that we scale. So we have a lot of ideas, but ultimately, the integrity of what we're doing can't support billions of dollars under management. And so we want to just stay true to our core. And then, in terms of branding, we just want to have stronger and stronger international presence. We want everyone to know that, we're a great place to look as you're kind of the first, looking for your first tranche of capital. And that ultimately you get more than a check, because that's a commodity, that you're getting support through a community. And we still have a lot of work to do on that front, honestly. There's so many things that I think are broken and that we can improve. And so, that's where we want to spend our time, is strengthening our community. And, as anyone who's built communities knows, they're really hard, they're amorphic, and they change. And so you have to kind of always stay ahead of the needs of the community, as opposed to trying to run a playbook.
What is I guess what does running a community look like? Is that every month we'll have an event in these major cities that we invest in, or is this we have a super active Slack group, and how are people motivated to kind of being a participant?
I mean, that is the golden ticket. Who knows? Everyone has kind of their own way. But yes, to all the things that you said, we have all of those things, including a very well built out CRM, where people can, really kind of understand who's in the community, connect with the right people. And then again, our ideal is not to scale out the community, because as you know, when they get too big, they lose their intimacy and they lose that specialness that everyone felt like at the beginning. So we don't want to make the mistakes of other communities. So Can't get into all of the things that we do for founders, but yeah, those are definitely some of them.
I wonder when you are let's say like when how do you measure like I mean I guess like how do you spend your day because you guys invest in money, health, and work, and then in so many different like the companies are in so many different countries, over like 250 companies. And like how do you leverage your like resources, and how do you spend your time on a daily basis, and how do you think about the competitive landscape? Because I feel like emerging manager are popping out every single day, and like a lot of operators having their own like syndicates. What's your thought on like the general competitive ecosystem, and how do you plan out to stand out for like a long time?
Yeah. So, what's cool about early stage is it's collaborative, not competitive. So I would say, pre-seed investors, we're friends with all of them. They call us to be in their deals. And it's usually, most people don't want to invest in these deals is I would say more common than everyone fighting for them, right? We build conviction and then we help, get us in to get together. So I feel like there's more collaboration than competition. Yeah, there's definitely a lot of money at the early stage. Founders need to make their decisions about, who would be additive. And I think kind of the community and the way that we've galvanized it, around the stack that we've built is pretty unique. And, founders seem to like that. And then I think, we actually do a lot of just kind of marketing and promotion of our startups, whether they're on our podcast or in our Substack, which goes out to about 20,000 people. And we have crazy high open rates. I think there's a lot that we can do to help founders kind of get the word out about their companies. And so, we enjoy doing that as well. So what was the first part of your company? Question. You can only ask me one question at once. I can't remember.
Yeah, I'm so sorry. Yeah, I'm a multi-question asker. So I guess like how do you spend your time too?
Oh yeah, spending my time. Well, running a microfund is more akin to running a startup than it is if I was working at, Bain Capital or, Sequoia. So my job is not just to, hunt down and find the best companies, but my job is to run the organization, right? And so what that means is we have a team, so I need to manage the team. What that means is I need to raise capital, so I need to make sure that, we have LPs and that our LPs are happy. What that means is I need to market the fund and make sure that people know about us. So I need to be out on speaking engagements. I travel quite a bit. And so, I'm traveling to events. So I'd say, day to day is a little bit of everything, but I probably only spend, and then we have a huge portfolios, right? So all the portfolio fires and all of that. So those are kind of like the 5 primary roles, I'd say, of a micro fund manager. And so I probably only spend 25% of my time actually investing, which is like somewhat mind blowing for founders who think that, investors' jobs is to invest. Well, I mean, I have to wear a lot of hats, right? Because there's a lot of stuff to do. So I'd say it's a little bit more like being a CEO, where the CEO of a company is not just, selling and focused on the numbers, but they're focused on recruiting and they're focused on keeping the company capitalized and they're focused on lots of different things that are happening. So yeah, that's what makes it fun. I'm a 2-time founder and I enjoy the kind of operational kind of strategy around running it because there's a lot to do.
Totally. I wonder, I want to touch upon the fundraising a little bit. Like, so I wonder, how did you close your first LP? And what does the fundraising journey look like for you? Now, since you already have a fund, and like how everybody's fundraising, I guess, like all the time to a degree, like from any successful founder or LP.
Well,
So
I'll just
everybody,
thank you because that's not us. We just take capital from founders. So we don't have to close them. We don't have to do anything. They're just in our community, and that's a very different. But we have 500 of them, so I need to make sure that they're engaged, and I need to make sure that they're happy, and I need to make sure that like we know who they are. But we don't spend much time trying to attract new LPs.
I think it's really like I think you have to be very exceptional to like actually having like the founders as your LPs to be in the orbit from time to time, from like just like a long period of time, because I feel like any type of commitment um for like an individual like is kind of like pretty substantial to a degree. So like I wonder, especially I feel like for founders to invest in a fund, a lot of times I think people want to invest in themselves or like investing in their own company. I guess like how do you navigate the relationship, and I guess like how do you build like a culture that people would trust you to like, also believe in the fund would like outperform a lot of things.
I mean, most of our LPs are investing as angels. They've taken money, they've given money. So I think we have a very aligned community that believes in what we're doing. And our advantage is that you can do that as an individual, but if you kind of get all of these people together, you've got obviously greater mind share, greater reach, greater support. So I think everyone is kind of excited about being part of something that's bigger than themselves. Everyone that's involved in our community, that is. And so, our whole premise is that we're stronger together, whether that's we're looking at deal flow across all these people or, quickly being able to diligence something because we can, get to people quickly. So, I think that's the premise. I think the way you build trust is you do what you say you were going to do, right? So I think that's what every LP wants. They want a plan that seems reasonable, a methodology that they think someone can execute, and then they want them to execute. And so we've done that fund after fund after fund, right? We've raised the fund, we've executed the fund, we've stayed on strategy. And then, now we're starting to see the fruits because our first fund, as I said, we've returned capital. And so, that's just another thing that they can look to in terms of execution. So, I think that is kind of the secret sauce for making LPs happy, is really executing on what you said, not throwing any curveballs, and just staying true to who you are, right? I think there were a lot of funds that during buzzy times, they decided like, oh, now we're a crypto fund, now we're an AI fund. Like, we don't do any of that. Like, we stay true to who we are. Neither one of those verticals are things that, we're experts at. And so although we do have some Web3 companies and we do have some AI companies, we stay true to our model, while not like closing out the world. We want to be obviously open to new things, but we're not running after the flavor of the month. And I think LPs appreciate that. We never have to send emails saying like, change of strategy, or now we're doing this. You'll never get that email from me.
Amazing. I wonder, I guess like how do you do due diligence on the profile, like on the portfolio companies? I know that you briefly mentioned in this other podcast about like, leveraging the LP network, as well as like, if someone have like really high conviction on a particular deal, like what does the diligence process look like for your fund?
Yeah. So, I mean, again, we've got geographic experts, right? Because they've been running companies in different geos, and then we have sector experts. So if we're looking at a company in Austin, Texas, we have about 40, 50 LPs down there. And so any company, any person, someone in the community is going to know, right? And they're going to know, they either worked for them or they, so there's a lot of touch points. So you can quickly kind of triangulate, wow, is this a good person? Is this someone that has a good work ethic? Is this someone that is true to their word? Kind of all the things that you want to know about a person. Do they have good standing in the community? Are they community oriented? And then we can kind of slice it by vertical and say like, okay, this is a digital health company. Let's talk to, a bunch of our digital health founders and LPs and say, what are you seeing on the street and where do you think this fits? And do you think this is an interesting opportunity? And those people can be anywhere. And so I think is unique is that if every fund probably has these experts, we just have 500 of them. And so it's very easy for me on any type of company to get directional feedback probably within an hour from a good number of really clued in smart people.
Would you send out like these questionnaires to everybody? Not questionnaires, but like how do you do like portfolio updates? Like, do you update people on every deal? Is that quarterly? How does like running a fund look like for you?
Yeah.
And from like the investing side?
We're very transparent. And so our current fund, we actually send a monthly update, and we actually do something really fun, which is we just put it on a Notion page. And so folks can go in at any point, although we do kind of remind them at the beginning of the month that we have updates, but we're really transparent. As part of that update, it's new investments, it's what's going on in the portfolio, it's what were the events that we were part of, what was the media that we received, how are things going in the fund. And then I think the part that people like the most is we always start it with kind of a little bit of a market pulse, like what are we seeing on the ground, what's happening. And I think a lot of our LPs, they're really excited about that. They know that the day-to-day or a month-to-month with a company is immaterial because these companies can be around for a decade. But what they really enjoy is hearing some of the market insights or what we've learned, or something notable that's happening that we have a take on. So I'd say that's one of the things that they really appreciate.
What does your portfolio construction look like? And do you save things for like reserve or like just investing, just like having many shots on goals?
Yeah, so we will do about 85 companies in this new fund. We write one check, and then all of our pro rata we do through SPVs, so single purpose vehicles, where we we collect capital from our LPs who are interested in different areas or different companies for our follow on. But yeah, we just do one check. We try to buy up ownership early.
What do you think is like the most challenging part of your job?
I think the most challenging part is just not knowing if you're good at this for a long time. We this summer, one of our companies became a unicorn, and we were, everyone was pretty excited. And so there are these benchmarks, but they're a little bit obscure, right? And they're few and far between. Like this was 5.5 years in. So I think the hardest part as someone who's type A and who likes, quick feedback is that the feedback loops in venture are really long. And so you can be building a brand and doing all these things, and you could actually suck. And like no one's going to know for quite a long time. And I think that's really, that's hard for someone like me. So I'd say that's probably the hardest thing. And then the other thing is, as fun and exciting it is to be kind of a CEO and wear many hats and do many jobs, sometimes you're just like, oh, I just want to focus on this one thing. But you've got, again, your job isn't just about meeting founders, finding the best ones and investing. You've got these kind of 5 core areas. And so sometimes I feel like I'm not doing any of them, as well as I should. And so that's always hard. But I do like the variety of it. And so, there'll be like a few weeks where I'm like, I'm just going to focus on some of our kind of back office things, our back of the house, like our data. And so we'll get like really into that. And maybe we'll do less new investments those 2 weeks because like we're really focused on some operational things. And then sometimes it's like, I literally have 12 new founders that I'm meeting in a day, 30-minute Zooms, and it's just like deal flow. So, I like that part, but sometimes you feel like, okay, if I'm doing so much of that, I'm neglecting something else. So it's a little bit of a whack-a-mole.
I wonder, like, what's your relationship with your co-founder? Do you feel like he's more like a complimentary person, or like do you feel like you guys are like kind of the same person? And how do you kind of like have the how do you have the trust to build like a fund with someone? It's kind of like this relationship have to be longer than like literally anything kind of thing. So what's your thought on like having a co-founder for your fund?
Yeah, I mean, I think it's really hard, whether it's your fund or your startup or your life partner. So we did a lot of try before you buy. So we raised a two proof of concept funds before we decided to go full time. So we had actually worked together for a number of years. We'd invested in more than 100 companies together. So we had kind of built a track record and a relationship together, which I think maybe stems from my reticence about teaming up with people because of, just the data that most relationships don't work out. And that's really hard. In terms of our styles, he's like way more laid back than I am. And I'm like a kind of intense, more like type A person with a lot of opinions. And so I don't think you could have 2 Jennies. So I think we're complementary in that way. He's definitely like, I'm a little bit more like, I see a lot of opportunities. Like, I'm good at chasing things. I have a wide net. Scott is more, I would say, intellectual and kind of likes to go deep on things and really understand them in a core way. So I think that also is complementary in our skill set.
Mm. I wonder, do you like intentionally, like, let's say if a deal comes to you and it's like basically it's getting a lot of interest from let's say like a tier one investment firm or whatever, but it's like a little bit earlier stage for them, yada yada yada. Like how big of like a local shopping vibe do you feel like you would want for your portfolio company to kind of like have to, or if that's like not really a benchmark? Because I think like, because when you're looking at like AngelList related like syndicate, so like basically people having syndicate on AngelList, many people have shared that like people like to logo shop. People want to know, you know, XYZ fund is investing, so they will invest with them. And I guess like if this is like a good benchmark for you to push a deal forward or not.
Yeah, so at the pre-seed, there really isn't a lot of that because the big folks are actually not investing at our stage. I mean, most of the deals we're doing are like $1 million in size, right? And so there are no Sequoias or any of those folks that will write checks that small. So it doesn't happen too often. But, you know, I would say if a pure fund is in that we really like, I'd say that's a good signal, right? Because we're excited to be on the cap table with them. And so I'd say that makes us maybe lean in a little more. If there's a pure fund that we don't think is so great, I don't think we would walk away from the deal, but, you know, we would use that as a signal. So I'd say, you know, for the most part, not really worried about what the other VCs are doing. I think more importantly, a lot of our deal flow is coming from our founders and operators. And if they, you know, call us and say like, hey, this was a really great product manager, she's leaving, she's starting a company, I'm putting a check in, like that's the most important thing. This is someone who's worked with this person or knows them or, you know, has a point of view. And so I'd say that is what gets us more excited. Like we don't really care who else is in the deal. And I'd say it's a negative signal if it's a tier one, you know, Series A fund in, because they're just going to get into trouble for later on because they shouldn't be investing so early.
Mm. What is like Cornell Tech Startup Studio?
Yeah, so so I'm the co-head of the startup studio, and Cornell Tech runs a 1-year multidisciplinary program for folks that want to get in tech. And it's a really exciting program. It's a mix of engineers and MBAs and folks from all different disciplines who kind of come together. And in our class, they're building startups, and a number of them will actually spin out. And there's a very cool competition that happens in May where we give away lots of money to help these founders. So it's a program that's geared towards people that want to explore the founder journey. And the class is run in weekly modules where we help them with things like product and go to market and all of these kind of topics as if we're building alongside them.
So like, I guess like, how is this like, is this like super closely associated with Cornell or like the engineering school, or like how is this like kind of like differentiated?
Well, it is Cornell.
I know I sounds like so stupid right now, but like sometimes.
So it is Cornell, and Cornell Tech is actually located. So Cornell is upstate, the main campus, as many of you know. And then Cornell Tech is here in Roosevelt Island. It's a little island between Queens and Manhattan. And Cornell Tech is actually a partnership between Cornell and Technion in Israel, bringing kind of the best in class, best practices, best people together to teach the next generation about all things tech. And so some people, who take our class will go on to become product managers at Google. Some will go into venture, and a big group will, potentially start their own companies. So it is part of Cornell Tech, but what's cool is it's multidisciplinary. So it's not like, it's all MBAs or it's all engineers. It's a mix of all the different programs that Cornell has to offer. We have doctors that are in our program. We have lawyers. We have, people from all over.
I wonder, like, what's your, I guess, like, because I'm just looking at your resume and I'm looking at like these, like, I wouldn't say extracurricular like programs, but like I wonder, you're also like an adjunct professor in Columbia, and you were like Kaufman fellows. Like I guess like do you feel like these programs will help you with deal flow, or like what is the I guess like the outcome that you're expecting out of, expanding your, um like basically like stretching yourself outside of like investing, because I feel like I can imagine like managing a fund it's already like a lot of work.
I mean, it's a good question. I think my teaching really stems from my desire to give back. When I was a student, there wasn't much available. And, like many colleagues of mine, I got marched off to law school, which, was a great experience, but there just wasn't a lot. Obviously, that was quite a long time ago. And so for me, being able to potentially inspire or, help the next generation of incredibly smart people not feel like they need to go to Goldman or McKinsey, that they have to. If they want to, that's fantastic, but that there are other paths, and that even if they do those things, that they should know there's an entrepreneurial mindset, right? Kind of this mindset of how to be in the world. And I just want to share that with other people. So yeah, it definitely takes time, but I think it pays dividends. I don't think of it as like, what am I getting out of it? I think of like, what am I giving back to the world?
How would you, I guess, like if you're entering the venture ecosystem today, how do you kind of like quickly find out about your superpower, and how do you kind of like leverage your superpower to become a fund manager, or like having a more, um, just like having a great career based off what you're good at?
Yeah, I mean, I think it's tough getting into venture. And so what I mostly coach young people is, either start a startup or go work at a startup or go work at, a tech company. I think those are like three good paths. Become a great operator at, a FANG company, and really like learn how to be great at something at one of those companies, learn how to, work with other people, how to manage people, etc. Another path is to, join a startup, and it doesn't have to be so early stage, but be part of that growth trajectory, right? And I think that's great. And then the final one, which is, not everyone has the means to do this or the risk appetite or the situation, but start your own company. I think those are the best paths. I think this idea of like joining a fund as an analyst and that you're gonna go up the ranks and make general partner, I just think it's really hard, and there's not that many firms that have that model. So I wouldn't say that's a great trajectory, and mostly because I think most of us agree that a good manager is someone who's been in the world, who's had those good and bad experiences, and who's learned some of these skills by being in it as opposed to studying it. And there are plenty of other examples, but I'd say that's a great trajectory. In terms of finding your superpower, that's really about figuring out what you're great at, right? Are you great at hunting down deals? Are you great at fighting for deals and winning them? Are you great at supporting founders in an operational, sense? And so, figure out what your lane is, and then I'd say lean into it and start writing about it and start, just kind of cultivating a little brand around that thing. I think that's a really great way to be noticed, and obviously to kind of excel at whatever area you're excited about.
When you mentioned about like, being an analyst, like, so basically people, if they just start out and like their first job is like being an analyst at like a VC firm, what are things that they need to kind of like equip themselves before they start their own fund? Because we've seen like, there's a lot of emerging managers that are very young and like, doesn't really have like a, working at company ABC kind of like background, or like it doesn't have like a super strong, like super long track record. I would say, I wouldn't say super strong, but like I would say super long track record, versus like, who are the people you feel like in the venture ecosystem have longevity, and besides like, going through like a traditional path, like let's say when you mentioned about like working at a big tech company, like a FANG company or something, I don't think everybody have the ability to just getting into a FANG company unless you're like engineering background. It's not necessarily like.
And you think so they can't get a job at Google, but they should be able to get a job at a fund? No way. Much easier to get a job at Amazon doing business development or something like that than to get a job at venture. There's like hardly any jobs at venture. Like maybe there's 10 that open up a year in New York, right? For of every single person who wants it. So if you can't get a job at a FANG, then I don't think you should be in venture either. Like it's just hard. You got to be scrappy. You got to find your way. But yeah, my belief is that you need life experience, whether that's operating or running a company or something before you go out and start a venture fund. And I think there's this weird, like in the last few years, entitlement where it's like everyone thinks that they should be able to start a fund. And I just don't really believe that. I worked for 8 years building a track record and building my network before I started a fund. And I felt like, there's a kind of a weird psychology right now because there's a lot more money out there, or maybe not right now, but a few years ago, where everyone who just was in the startup ecosystem thought that they had a right to start a fund. So I don't really believe in that.
I guess like what do you think are the core things that you need to be equipped besides like, having operational experience or like having management experience? Obviously those are like experience level things, but what are some actual like other technical concept or like knowledge that you feel like people should equip themselves before they entering the venture game?
Well, I mean, I think a lot of what you do as a partner in a venture fund is coaching founders, right? And so there's different areas. There's like interpersonal areas of how you get along with other people. There's management areas. There's product areas, and there's kind of call it vision and strategy areas. And so I think being well-rounded in all of those things can be really helpful to bring to these founders, because that's what they're calling you about every week is they want advice about this, advice about that. And if you've had firsthand experience on how to do those types of things, you're obviously going to be kind of well equipped to support them with some ideas at least.
As for like, I guess as for like running your own fund or running the community, do you have like a set, I guess like a checklist that you have to go through from time to time to like maintain a certain level of just like being hands-on to like spend time with the community? Or do you feel like there's no set checklist? You just like overall do things that you feel like make sense?
Yeah, I mean, we're evolving, and so we're always kind of thinking of new ideas and implementing, different experiments. And a lot of the experiments don't work. Some of them do, and so we try to lean into the ones that do. And we're just kind of learning and iterating like everyone else.
What are some experiments that you've done that you feel like worked well, and then what are something that you feel like we're not doing so well?
So we tried one experiment where we put together cohorts of founders, and I think that worked well in the beginning, but a lot of it was kind of COVID fueled, where people were happy to get on Zooms and kind of they had a lot of time. But I think when COVID stopped, we realized that people preferred to be out in the world. And so at that point, we started kind of ramping up our IRL events. And so what worked really well is that we do, these dinners around the world, really, wherever we are. And, it's just, our founders, our founder community. So anyone who comes really knows that these are high quality people. They're not transactional, and they're there just to, meet other great people. And so I think that's something that we did well, and maybe something that didn't work as well.
I guess I wonder, like, how do you build a community that's not transactional? Because I feel like being in any tech hub cities, like, there's a lot of competition going on, and I wonder how do you kind of intentionally shape the community into a more friendly culture?
Well, again, it's not an opt-in community. These are just people that either invested in our companies or we invested in them. So I think there's kind of a shared alignment and interest there. In terms of building larger communities, like we only have 2 minutes left, and that's a longer conversation. So not sure how to do that, but we don't again have a problem because we're not a huge community. And we're all aligned, financially, and I'd say kind of from a worldview point.
Okay, so I want to like have like one real question and then 1 minute fire round for you. So, what's your like content diet look like every day? Since I know that you're very active on Twitter, as well as like you have to create content for your own podcast, and I wonder what's your content diet look like to kind of like keep yourself in the loop of like all the new trends happening. And
I mean, I think, most VCs are ingest a lot of information. And so we like to read, and we like to, be part of, different groups. So I'm on tons of WhatsApp groups that are always sharing really interesting deals and trends and all these things. So I think I get a lot of my content from WhatsApp, obviously Twitter as well. But I try to spend, some time in between. I live in New York City, so whether that's time on the subway or while I'm running in the park in the morning, listening to podcasts. So I would say just as I'm between things in my kind of daily life, I'm always consuming content, and it's always tech.
Okay, so we have a 1 minute last fire round for you. So one question is, what's your favorite book?
Tech book, Venture Deals.
Who made the biggest impact in your career?
My parents.
Who would you invite to your dinner party?
I would invite all of my colleagues at Techstars, the other managing directors, because those are the people that I really learned how to be a great investor from.
Where can we find you outside of work?
Running in Central Park.
Oh my God, what a dream. Okay. Well, thank you so much, Jenny, for coming on the show today.
This was really fun. Thanks for having me, Grace.
Let me quickly end stream.